What's going on, guys? Welcome back to another inter-equity trading video. Today we're bringing you a new episode of Training the Eyes. Yes, the series we all know and love. This is going to be episode number 8. I don't know, I feel like the more I record these things, the better they get. Get your notepads out, take your time, rewatch the video if you need to, but please take notes. Lots and lots of gems in this video. I hope you guys all enjoy. If you do, please leave a like, leave a comment down below, subscribe if you guys have not yet already. We just hit 15K. Road to 20K is around the corner. Thank you all so much. See you soon. Take it easy. All right, guys, we're here back on the gold chart today. Going to be staying on the 15-minute and probably in and around the 5-minute chart for the most part. Again, remember the sole purpose of this series of these videos is to train those eyes. So we're literally just going to study what's in front of us right now, because that's all that's important. I just picked a good set of price action to go over. We're going to cover everything from left all the way to right. So what can we see? We have a high in the market printed here, and we get a sell-off to the downside. We end up running all the way back up bullish and taking out this high that we printed before. Why is that important? Naturally, this means that buyers are induced in the market. It does not mean that we're just going to sell all the way back down. We need to pair that with liquidity always, but it's good to have an idea that when we take out this high here, buyers are induced. So following that, we print this high and we sell back off. We're naturally just going to mark on highs and lows and follow the liquidity. So low, respected low. All right. And we move away to the upside, taking out an internal point. Why is this important? Inducing buyers. We get a pullback, lows respected. So we're building even more liquidity here. All right. And we can actually even mark this out for you, just again, so we can train those eyes as much as possible. Just like that. Perfect. Off the back of that, we go long, taking out previous highs once again. And we end up printing a liquidity block. Okay. Why is it a liquidity block? We've simply just grabbed a level of liquidity and went bearish after that. Following this high, you know what? We will go into the 5-minute for this bit of price action here. We print this high, we sell off, and we print low, high, low, high. What is that? That is a simple market structure pattern. We take out a low, sellers are entering positions. So look, sellers entering positions, and then we move bearish very quickly. Okay. What does that tell me? We have built liquidity above this high. So we'll leave that there. That is simple structure liquidity for retail. Again, sellers would be entering here and here, and then it moves in their favor. Perfect. So now we understand that liquidity has been left here. Heading back to the 15-minute time frame, following that internal liquidity built, look at this big sell-off to the downside. Remember, these lows that we set up before, we ran exactly for them, almost like a magnet. Now, if we continue looking to the left-hand side, look what the market's tapping into. So this big sell-off, printing this low, look at the left. All I see is another level of liquidity. Why? Price takes out this high, we get a pullback, this low respecting lows to the left-hand side. And again, you can always draw this like a trend line, however you want to draw it. The importance of this is understand that we have built liquidity here. Simply mark this on. You can even grab these lows. You can grab the overall low if you want, but just to be a little bit more precise, we'll just grab these internal ones. That's completely fine. But look at this. We respect it once and we respect it twice. Why is this important? But imagine if anybody was buying down here at the lows, maybe they entered in here, or they entered in on the second reaction, then the market went bullish to the upside, indicating, telling us, literally the market is communicating to us that we have built liquidity below these lows. That's the important part here. Following that, you can see we took out that low, which again, then respect the lows and went bullish. Perfect. But we took out that low. Why is that important? Induces sellers. Anybody selling this market will look to sell in these regions up here. They get trapped. But now this is a lesson for everybody here. A lot of the uninformed traders, you guys would be looking to take a sell right here, but that's not correct. Why? Remember that internal liquidity we marked on to the left-hand side over here? Look at these lows, or sorry, look at these highs, I should say. I'm going to drag this over. Look at this. Boom. We end up hunting for that internal liquidity point. So don't make the mistake of looking for shorts up here when we still have liquidity to the left-hand side. You want to be starting to look for shorts in these regions up here. Don't just force that short. Don't be a pattern trader. Just because we took out this high does not mean we need to be looking for sells right away. No, that would be right here. You need to make sure that that internal liquidity is taken as well. That would be up here. And then in the chart example, up there. Okay, let's clear these markings. Then we grab that internal liquidity point we've been talking about. Remember, the market purposely engineered it in the past for us to now run it in the future. We get a reaction down, pull back to the extreme, maybe a possible sell entry up here. It is out of my time window though, so I was not taking this. Then we get a big, look at this, volume move to the downside, trapping buyers, but not only trapping buyers. So we trap buyers here, yes. Okay. Again, why do we trap buyers? We'll mark it out just to make sure everybody can see it as clearly as possible. This is a BOS for retail, and people are going to be buying at these lows. Once we trade below them, we understand buyers are trapped, and we're also inducing sellers by that. Okay, that's very, very important. If you guys aren't familiar with that, please go look at the liquidity inducement series I've been making on the channel. That'll clear some things up for you guys. All right. So following that run on that low, okay, I'm going to drag this over to the left. We then run bullish. Remember, we induce sellers, right? So where are sellers looking to take this thing lower? At the highs. Look how we even get a reaction. This is all done on purpose. Okay, so we get that reaction at the high. We allow sellers to get in the market. Okay, then it pushes up and traps. There you go. Now sellers are trapped. This is when you want to start looking for sells back down. This is when you want to start looking for sells back down to the downside. We have liquidity built all the way at the lows. We'll drag this over. Sellers have now been trapped. Okay, on this current picture, this current story that we're building right now. Remember, look, from high to low, we take out this low, inducing sellers, which means liquidity above this high. We trap them and look at the market give you that relief to the downside. Now let's continue on with this price action. We take out this high. So remember, this is going to be a trap. Look what the market does. It gives us a temporary reaction. Check this out. So mark on that low. We're building liquidity at it on a lower time frame perspective. Okay, now we're going to hop in the 5 minute. Watch this. We tap into this red box area, otherwise known as a trap area. Price comes up, prints this high, respecting a high to the left. Once, twice, sell off. What does that do? Induces sellers. Where are sellers going to be entering? Up here. Look at us engineering liquidity here. This is a sell off that takes out a low to induce sellers. We do not sell from here. We allow the market to react though, to build liquidity for us. I need you guys to pay attention here. This is very important stuff. We allow the market to react here for liquidity to get built for us. Then we get another sell off to the downside. Look at this. This is the most important thing you need to be looking at right now. Once, twice, respecting the low to the left, building liquidity to the downside. Then we get another move to the upside, that false move that we always talk about. Boom. Trapping sellers. This calls for a sell right here. And you have very obvious amount of liquidity to the downside. That would be used as a target, a partial point, however you like to trade. This was market open and there was a little bit of a gap, so it looks ugly, but to clean this up for you, low taken, high taken, liquidity block. And if I can draw it in a diagram just to clean it up for you, look, low taken, high taken, liquidity block. All right. Now I know, bear with me, there's a little bit of a gap, and again, that's because of market open, but I've dissected it as much as possible. We take out these lows from the left-hand side. That's fine. Look at the market hunt for them swiftly. Okay. But don't forget, look at the left. We've been talking about these lows for a while now. Okay. We're going to get to this big move in a second here, but I want to break down this whole lower time frame. So check this out. This is an Asia session. We build some equal highs. The market sells off to the downside, inducing sellers again. Price pulls back into this area, reaction to the downside, sells off again, inducing sellers once more. Now, if I drag this red box over, look at this. The market simply reacts off liquidity. It builds even more liquidity. This is all done on purpose. This is where you guys might get psyched out. You have to trust yourself. You have to understand that the market will react off liquidity sometimes just to build it. Example being right here. This high respects all these equals to the left-hand side. And again, induces lower once more. This is a massive call for shorts above this high, and you have a liquidity block supporting it right above. Look at this. Drag this over. The market runs bullish to trap the sellers, but not only trap the sellers, to induce buyers, which means trap area to the bottom. Trap area at the lows, I should say. After running these highs, trapping the sellers, this is a call for a short right here. And if we dissect this price action, there was actually multiple entries. And watch this. This is textbook stuff. I'm not going to lie to you. So we get another sell off to the downside here. All right. low, high, low. Okay, common retail pattern where a seller's interested in taking this thing lower, right here at this high. We understand that we reacted off it once, twice, building liquidity at that high. Grab this high, drag it over, check that out. High ran, then we get a reaction lower, pull back. This calls for a short. Okay, if you miss this, no problem. Look what we do again. We induce sellers here, right? Where they want to be selling from at this point here in this red box. This is going to be an area sellers want to take price lower. And what do? We trap them. Another entry for a short. This was actually in my time window. This would be an entry I would take. How would I enter it? Just like this. Wait for the liquidity to get taken, aka the high gets ran. Stop loss. You can just cover the whole high to be safe. No worries. And then target 1 would be here. Why? Buyer liquidity. We take out highs. Buyers are induced to the low. This would be a valid area to target. And then of course our higher time frame target to the left-hand side. Just like that. All right, now look at this whole markup we have now. All right, from what it looked like before to what it looks like now. Simply following the narrative all the way along. Lots and lots of gems in this video. I hope you guys enjoyed this one. Yes, guys, I hope you enjoyed today's video. It was a good one. I'm going to continue to record more and more for this series because I feel like it holds a lot of value for you guys. But again, if you guys did enjoy this video, please leave a like and a comment down below. Subscribe if you guys have not yet already. We are on the road to 20K subs. Appreciate all of you guys for hanging, tuning into our videos consistently. We'll see you guys soon. All the best.